queries. So let's get started with our first caller. It's Sudarshan, who calls in from Andhra. Hi, Sudarshan.
Hi.
Hi, what's your query?
My query whether to Adani Enterprise can be retained or better to come out because of the latest decision taken by the company.
Okay, and you have 300 shares which you've bought at the rate of 500, is that correct?
Yeah.
Oh dear. Okay, so you're making quite a big loss actually. We don't have a fundamental expert on our panel today, but Nooresh, who's a technical expert, will try and help you with this. Nooresh, for someone who's making such a big loss on Adani, I mean, what are the charts telling you about Adani, and what's the way out for a retail investor?
Like if we look at Adani, there was a demerger, so it's not actually a loss. He would be receiving shares of Adani Ports, Adani Power, and Adani Transmission. So on an adjusted basis, there is not down 5-10% also from yesterday. So what we see is he can continue to hold on and continue to hold on Adani Ports, which looks good on the charts. So once he receives the shares, I would say overall hold on to the stock.
Okay, well, that's the call coming in on Adani Enterprise at this point. Remember that there is that demerger which has taken place and is already effective yesterday. But let's get in another query. We have Girish, who calls in from Gwalior, and he has investments in Eicher Motors. Girish, go ahead. Go ahead.
Mobile ko charge mein laga do.
Acha. Okay, I think we can just read out his query at this point in time. He has a buy price of 15,990 rupees, quantity 25, and he's sitting on a little bit of a profit at this point in time, not as much as what Volvo generated. But Nooresh, what's your sense in terms of Eicher Motors?
So if we look at it, technically the stock has been in a long-term uptrend for quite a long time. But given that the over-participation has come into the stock with 2 blocks in the last few months, I would suggest the investor to get out of the stock, exit it, and maybe buy it on declines again. Because what we see is going ahead, unless the investor has a view of 2 to 5 years, majority of the gains are already done. So I would say exit at current levels and look back towards, say, if it goes down by 20-30% towards 12,000 levels.
All right. Up next, Mittal has written to us from Pune. He has a query. He says he's 25 years old. He's a professional. He wants to invest 5,000 to 6,000 rupees in mutual funds and is looking to have a diverse portfolio. So his question, Feroze, is what are the funds, whether it's a debt fund or an equity-based mutual fund, that he could look at?
Yes, so one very important word which is used in his, when he has written to us is diversify. See, mutual funds' biggest advantage is to diversify. He has done one good thing of starting early at the age of 25, and then he's looking for a diverse portfolio, and a right mix of debt and equity creates a diversified portfolio. So 70% of his money, Mittal's money, should be in equity and about 30-odd% in debt. So 3 funds, 2 in equity, 1 in debt should do the job for him in the form of a diversified portfolio. 2 equity funds would be Birla Frontline Equity Fund. And on the mid-cap space, he can look at Franklin Prima Fund and invest 2,000 rupees in these 2, which is almost about 2/3 of the money in equity. On the debt side, he can look at a HDFC Corporate Bond Fund, which will be another 2,000 rupees. That's how you can start, Mr. Mittal, investing your six grand and have a very good diversified portfolio.
Okay, well, thanks, Feroze, for that. So that's our personal finance question answered there. But